What's going on with the stock market? Should you be buying stocks now or should you wait? I'm going to bring you up to speed with the stock market. I'm also going to share 7 stocks that I'm buying now.
Our next guest calls it a moment of dual fragility for equities, but believes the recent dip will likely be bought.
I do wonder how much of your thesis depends on the Fed cutting this year.
I think it's important for the Fed to be dovish this year. And in terms of how many cuts they do, I know there's going to be a lot of debate about, well, is it 3 cuts or is it 2 or 1? But it's really going to be the reasons why they make fewer cuts. If the economy is resilient and inflation is not accelerating, so they end up doing even as little as 0 cuts, that's actually quite bullish because, one, the Fed still has a lot of firepower to make future cuts, and it just shows you the economy is handling higher rates pretty well. I mean, I think it would speak really well for equities if the Fed made fewer cuts, but for the right reasons.
So, of course, with the stock market, macro geopolitical issues are going to be important. And there's always that push-pull dynamic. And the recent sell-off, this headline sums it up really well. So yields jump. And what happens when treasury yields go higher? Risk assets generally get sold off, especially the higher risk growth stocks, the speculative stocks, and so on. Traders await Israel response to Iran. Obviously, geopolitical tensions. When the stock market was basically at all-time highs, it's not going to take much of an excuse for the market to sell off to take some profits.
This goes to the question that ECB board members were talking about, which is that they might not be able to cut rates because of geopolitics. Do you think that this sort of 1-2 punch is looking more likely for the Federal Reserve as well, that they will keep rates higher for longer in response to higher commodity prices, even at a time of a potential shock that could curtail growth?
So, Lisa, this is a great question because I think most people, not everybody, most people on your show have now agreed that the last mile of inflation is going to be complicated, that inflation is more sticky. Where there's massive disagreement is what the Fed should do and what the Fed will do, right? There's massive disagreement. There are those who think the Fed should hike. You had the UBS today showing 6%. There are those who think, like me, the Fed should maintain its course and cut twice this year by 25 basis points. Now, why are we all over the place? It's because we disagree on what our star is. We disagree on what the right inflation target is. And therefore, we disagree on how the Fed can best meet its dual mandate. So this is where it's going to play out over the next year. In order to predict the Fed, if you think they will remain data dependent, which they are today because they got so embarrassed by what happened in 2021, then the Fed will not cut. If, however, like me, you hope that they will go from excessive data dependency to also having a macro framework in their head and looking forward, then they would cut. And that's what we're going to see play out in the next few months.
But if they are data dependent and you see inflation, we had hot retail sales yesterday, and they do start to get more concerned about inflation, is it not just they're not going to cut, like the UBS note? Do you think they could hike?
Look, if inflation gets much worse, they could hike. But I think if they do hike, we're going to have a regional banking crisis. We're going to have all sorts of damage in the marketplace. And I think that is at the back of their head. So I think the likelihood of them hiking is low. Is it 0? No, they could.
What's the difference between them hiking 25 basis points and just holding for the rest of the year? How big is 25 basis points?
The minute they hike 25 basis points, they open the way to hiking more. That's the difference.
This is why the stock market's so fun. And if it were easy, everybody'd do it and everybody be rich. There's no question that the Fed controls the destiny of where the stock market goes in the future. But that's going to be the longer term narrative because most will agree that the Fed, the earliest they're going to cut rates is June, if not later. So what do we have in the shorter term horizon on the macro? Earnings season. And of course, earnings season has officially kicked off and the major banks have reported. We had Bank of America this morning, also companies like United Healthcare, Johnson & Johnson, Ericsson, and more. And Wednesday before open, we have ASML. We're going to have companies like Las Vegas Sands in the evening. We're going to have Taiwan Semiconductor here Thursday before open, Netflix and Intuitive Surgical Thursday evening, American Express, Procter & Gamble on Friday. Now, I believe that earnings season, of course, is going to decide what happens next for the market. So far, earnings have been pretty good. And here's Tom Lee's take on this earnings season.
Tom, to the extent, sorry, your thesis depends on obviously earnings coming through. We're at the beginning of earnings season. What are you looking for both now and through the back half of next year in terms of S&P earnings and growth rate?
Well, earnings in the fourth quarter that was reported 3 months ago came in close to 8% above expectations. That's already flowed through into what we expect for 2025. First quarter's already looking pretty good. More than 80% are beating. So I think our 2025 earnings, which is officially 260, and that was 8% earnings growth, is probably low. It's looking like it's going to end up being closer to 270, maybe 275. That's a $15 higher earnings for next year just because of the strength of earnings we're seeing now. So I think profits are coming in pretty well. I mean, inflation's cooling, but companies are still finding operating leverage.
So I'm in the camp. I believe that earnings season will be good. Of course, you're going to have some companies that are going to miss. You're going to have huge sell-offs on some of those high flyer names where you're going to have a SaaS company down 20% after earnings. That's going to happen. When I'm buying stocks, I'm thinking long-term, 2030 plus. And when I buy, I'm using dollar cost averaging. So what I'll do is I'll find a stock, I'll research it, I'll decide I want to buy it. I'll determine the price that I'm willing to pay for it, and I'll nibble a few shares. I'll nibble maybe 10%, maybe 20% of my position, and I'll wait. It gives me room to add. Now, there's pros and cons to anything, and some people disagree. Some people will say lump sum. This is just what I do and what works best for me. So on Monday, we got retail sales jumped 0.7% in March, much higher than expected. So the forecast was 0.3%, and we got a 0.7% print. So one of the stocks that I've been buying on this dip is Lululemon. Ticker is LULU, LULU. This was a $516 stock, and you can see it sold off hard. In the S3 here, this is a Fibonacci support S3, $324. Now, retail is still strong, and I realize that Lululemon has competition, and I consider Nike best of breed. So Nike is the one I'd own first, but I already own Nike. I bought it back in 2012. I have owned Lululemon stock before. I sold it for profits. For me, it's just hard to ignore at these prices. We had a recent chart day. We said, this is why you don't chase. It went from $516 to $386. You can see it broke all the technical levels, all the moving averages. It's down here. The only thing left is this S3. So when this got closer to this S3, I nibbled some shares. And of course, this company is going to report earnings here in late May. The stock could always go lower. But I find this to be attractive risk reward, especially around that $335 level. And if it goes lower, I'll add more shares. Last week, I made a video, 10 best AI stocks to buy now. And several days before that video was made, I posted this in Discord under Eric's watch list in Elite. I also shared this information on that video a week ago today. Several of these stocks have come into these price levels and I've been buying. One of those stocks, which I added to today, is Snowflake. Now, if you remember when the earnings came out, this was trading at $237. Earnings came out, it started to sell off, but it was still closer to $200. It was like $185 after earnings. I came out with a free write-up on Patreon, and I told you guys, $150 or less DCA. It might not get there, but I have a good feeling $150, it's going to break that level. I also did a video 2 weeks ago. I said Snowflake, dollar cost average $150 or less, don't overpay. This morning, it broke $150, and I added more shares. Another one is Navitas. Now, I said I like this stock, $4.50 or less DCA, and I prefer it in the threes, and it got into the threes yesterday. It got to $3.80, and I added some shares below $4. I also added some slightly above $4. And I've been warning you guys about these spec stocks. Stocks like INDI, SkyWater, ACLS, Navitas, these are small cap semiconductor companies. They're high risk reward. They're speculative. They're burning cash, not profitable. And this is not the environment for these stocks. I've said many times, if you don't have a portfolio baked out with high quality names, the high conviction names, those best of breed names, buy those first. These are the nice to haves in your spec bucket. Generally with spec, we want to manage that 10% or less in a portfolio. So if you have a $100,000 portfolio, $10,000 in spec, and I generally like to have between 10 and 20 stocks in that basket. And that's the hedge risk because these are high flyers. They're literally 10x or 0 type stocks. I believe once interest rates start coming down, stocks like this could absolutely fly, but most would tell you that this is not the time to be buying small caps yet. For me, I like to accumulate prices that I think are good buys, and I dollar cost average, and it works for me.
What does Rocket Lab's role in that one-day space economy look like? You call yourself an end-to-end space company now. There's all of these things being thrown out there, down mass, space tourism, pharmaceuticals. How will Rocket Lab look in that bigger space economy in the future?
This is actually really important because I think if you look at the large space companies of the future, it's not going to be a launch company, it's not going to be a satellite company or a down mass company. What it's going to be is a company that is end-to-end. Because everything in space is a giant compromise. Like if you look at a rocket, as an engineer, it drives you literally insane. Because an engineer, you want everything perfect, but everything is a compromise against everything else. Then you go and add a spacecraft on the top, and everything in that spacecraft is a compromise against everything else. And then you put them all together and you got one giant compromise. So if you can end to end all of that and actually just deliver solutions in orbit, you can eliminate so much of the compromise, so much of the bit in the middle, and it starts to get blurry between what is a rocket and what is a spacecraft. And that's when it gets really, really interesting, because at the moment, the industry is very segmented. It's like, I'm a rocket guy, here's my rocket, you make your spacecraft to fit in my rocket. And then the spacecraft guys, here's my spacecraft, you make your rocket, have the environments to suit my spacecraft. And it's very, very segregated. But when you start blurring that together, the power of that is enormous. And I think a good way to not to call out promote any of our competitors, but if you look at what Elon's done with Starlink, is case in point. If you own the spacecraft, you can launch the spacecraft, you can deploy infrastructure at a rate and a frequency and a cost that nobody else can even come close to matching. So Rocket Lab's end goal here is not to be a rocket company, not to be a satellite company, but to ultimately deploy infrastructure in space. Because as we talked about before, the total addressable market in space is 320 billion to $1 trillion. Of that 320 billion, like 300 of it is actually services from space. So whoever can put the services in space and maintain them and deliver service from space at the fastest rate, at the lowest cost, is going to win. And you need your own rocket to do that. And you need your ability to build your own spacecraft to do that.
That's a really powerful interview, and I wanted to share some of the highlights with you. Now, I've been adding more to Rocket Lab in both portfolios, the primary portfolio as well as the community portfolio. You can see this bounce basically just off the S3, $3.49. And I do like this long term. It's another spec stock, though. It might not be for you because this is a penny stock. This could be a massive winner for you someday, but it might not work out. So spec stock, 10x or 0, manage the risks, small position. Now, if you want more info on any of these stocks I'm covering today, subscribe to the channel. Make sure to check out some other videos because there are videos that go in deeper dive for all these stocks today. Subscribe to the channel and click that bell for notifications because this is the kind of information that we bring to you every single week. And of course, if you want to take your game to the next level, join us in our private community. Visit patreon.com/firedupwealth. And this stock I just covered in a lot more detail last week on that 10 best stocks to buy, AI stocks to buy. This is Gitlab. And I think the new product Duo does have a lot of room to run when you think of generative AI in phase 2. And this is another one here. It's close to $80 and it's sold off hard. And I think this is an opportunity here below the moving averages. Could it go lower? Sure. The S3 is all the way down here at $39.30. The S2 is at $48.20. So the lower the better, but I did add some around this 200-day moving average. So $55 or less DCA. This is Gitlab, ticker GTLB. Another stock I've been adding, Klaviyo, ticker is KVYO. Now I like this stock, $25 or less DCA. This was a new IPO back in September of 2023, so we don't have a lot of data, but it's trading at the lowest level since it came public as an IPO. But the numbers are pretty good on this stock, and I've covered it several times on the channel. Go check out some older videos if you want more DD. I do think it's possible that you see Klaviyo under $20 at some point, and I would DCA at those levels as well. I like it $25 or less. DCA is a long-term investment. All right, something really cool I want to show you, and this is a very helpful visual. This is breaking down an income statement, and this purple line, this is the stock price overlay. Now, this is for Tesla, and you can see back in February of 2022, the stock price was $359. The revenue was under $19 billion. So if you look at the trajectory, this is going back to 2019, so a 5-year chart. You can see the end of last year, we had the most revenue at $25.17 billion. Now, this is when the stock price was at $248.48. Today, the stock traded under $155 a share. Now, we will have earnings here on April 23rd, and that's going to really decide where the stock goes next. But let's just look at net income. This goes back to 2019. Of course, it was negative $702 million. And in 5 years, they've gone from negative to positive $7.93 billion net income as of November 2023. So you can see this morning, Tesla got down to $154 and change. It's trading right now at $157. But this is a really cool tool, especially especially if you're a visual learner, and it gives you an edge, I think, as a retail investor like myself, just to have some visuals of what's going on with companies. And many of the companies on here, such as Tesla, have unique KPIs. If you want to check this out, I have a link in the description. It's pinned in the comments and also in the description. And you can get a 10% discount by trying this out. Use coupon code FIREDUPWEALTH. This is called Mega Charts. I encourage you to check it out. But I've been buying Tesla, and I've told you guys on the channel, I think it's possible it gets below $150, especially if earnings don't go well. With that said, it's holding up pretty well considering all the negative headlines we've had. Just this week, a couple days ago, we saw a 10% reduction in workforce. It seems like every other headline is negative for Tesla. I'm still bullish on this company long term, and I hope it goes lower. The lower, the better. I want to buy more shares. If this video is helpful, make sure you subscribe to the channel, drop me a like, drop me a comment. Have a great rest of your day. Take care.